An anonymous trader with a 19-win streak just opened a massive $11 million 3x leveraged short on Bitcoin at Hyperliquid. This bold move signals strong bearish sentiment and highlights the extreme risks of leverage trading in decentralized markets. The position's huge liquidation buffer and the trader's track record make this a key case for market watchers. More than 40% of altcoins are now trading at or near their all-time lows, surpassing previous bear market records. With over 47 million tokens flooding the market, liquidity is spread thin, and major coins like Solana and Cardano have dropped up to 90%. Bitcoin remains relatively stable, but most altcoins face severe pressure as macroeconomic and geopolitical risks intensify. Nakamoto took a major hit, selling 284 BTC at a 40% loss to raise $20 million for business operations and upcoming mergers. They also sold 5 million Metaplanet shares at a loss, and now face a 40% year-to-date stock drop, risking Nasdaq delisting. Ongoing restructuring and large USDT loans underline the liquidity crunch hitting corporate Bitcoin treasuries. Solana staking rewards are shrinking every year, but a new Bitcoin reward model flips the script. As Solana's yields fall due to its inflation design, Bitcoin Everlight shard system offers higher returns as adoption grows. The model's real-time dashboard, transparent audits, and tiered rewards are attracting investors seeking scalable passive income. Ethereum is hovering at the critical $2,000 support level, and analysts say a sharp move could be next. If this support fails, ETH could see rapid liquidation down to $1.820 or lower, but holding above may open a path to recovery. Market structure remains weak, so traders are urged to closely monitor price action. Solana Foundation just admitted that Web3 gaming is dead, shaking the crypto world. Despite $5.8 billion in TVL, SOL holders are seeing zero yield from gaming projects. This major setback raises questions about Solana's future ambitions in blockchain gaming. A new Google Quantum AI study reveals Bitcoin's encryption could be cracked in just 9 minutes, far sooner than previously believed. The research estimates that only about 1/200 to 1/450 logical qubits are needed, putting roughly 6.9 million BTC, almost 1/3 of all coins, at risk from quantum attacks. With Google setting 2029 as a migration deadline, the crypto industry faces urgent pressure to adopt post-quantum security measures. Over 40% of altcoins are now trading at or near their all-time lows, signaling unprecedented market stress. Bitcoin remains more resilient, but major altcoins like XRP, Solana, and Cardano have dropped up to 92% from their peaks. Analysts point to liquidity dilution from over 47 million tokens, making it harder for projects to attract demand and survive. Geopolitical tensions and inflation fears just triggered a $414 million outflow from digital asset investment products, ending a 5-week inflow streak. U.S. investors led the withdrawals, with Ethereum losing $222 million and Bitcoin $194 million, while XRP stood out by attracting $15.8 million in new funds. Market sentiment remains fragile as Bitcoin trades sideways, reflecting uncertainty ahead of key U.S. policy deadlines. A massive validator exit is underway, as Kiln shuts down all Ethereum nodes to prevent potential exploits after a recent API vulnerability led to a Solana theft. Over 1.6 million ETH is in the exit queue, but most funds are expected to be restaked under new security protocols within 10 to 42 days. Kiln's move is seen as a security reset, not a market exit. For the first time in 6 years, Bitcoin's hash rate fell in the first quarter, breaking a long-standing growth trend. With mining profits shrinking, many miners are reallocating capital to AI infrastructure, reducing U.S. dominance and potentially boosting network decentralization. This shift could reshape the landscape of both crypto mining and AI industries. Recurring Bitcoin death cross on the 3-day chart often signals the last phase of market capitulation. Analyst Ali Martinez notes that after a steep drop, the 50 and 200 SMAs crossing can trigger another sharp decline, with $30,000, $40,000 as the likely macro bottom. Historically, this pattern marks the end of bear cycles.